Up now.
I do. Thank you very much. Good afternoon, everyone. I'm Charles Payne. This is Making Money. All right, so it was a spectacular 9-day rally. But, you know, listen, you had the sense really Friday, at least I know I did, that the weekend pause would sort of drain the momentum and then leave us vulnerable this week. Now, the lulls, like these sort of lulls in the action are actually, though, it's a great time, right, to do things for investors to sort of measure their conviction. And this week, without a whole lot of, data, exogenous factors, we can really think about this, right? Now, one data, of course, source have been earnings, right, from influential names. We've got a bunch of that out. And, of course, these moments also allow for soul searching from everyone involved in all of this, right, from corporate CEOs to Wall Street analysts. And on that note, we are in what I call the sobering phase of the tariff saga. They're going to be higher, folks. They won't be where they are now, but they will be higher, and people have to learn to deal with that and how to adjust to that. I thought this is a great comment from the CEO of Over City, talking about Jane Fraser, saying that their clients could actually absorb 10%, which I think will be the number outside of China. She worries about anything higher than that, like 25%. Of course, there are fewer companies offering guidance, but this is something really interesting. No company was supposed to offer guidance coming into this earnings season. Of course, they are. And you can see far fewer for the quarter ahead than for the year ahead. The year ahead, in fact, is right in the historical trading range. This tells us near term there is uncertainty, but longer term, companies are out there sort of adjusting for business the way they normally do. And so, again, the C-suites know that they will have a lay of the land come later on down the road. Now, interestingly, during the rebound, hedge funds, this is what they did, this big rebound, they flopped, right? So you have the dark lines, which are 20 days, the blue lines, which are 5 days. Everywhere they were selling, they started buying. Everywhere they were buying, they started selling, except in two areas. They kept buying real estate, which I think is really intriguing in this environment where no one sees rates going down anytime soon. And they kept selling energy and technology. Technology, I'm still not sure. Meanwhile, it's the retail investor, folks. Just keeps buying and buying and buying. How much? How about the strongest flows on record? On record. Someone once said to retail investors, buy on the dips, buy low. They believed it. Okay. The irony, though, is that people who told them that, the Wall Street strategists, they're sort of running for the hills. In fact, there's only one person left, right, that's really relatively bullish. Wells Fargo, still at 7,000, making him the loneliest analyst out there in the land of the herd mentality. In fact, you know what? He must feel a little bit like Tom Hanks in Castaway at this point.
I know you. I know you. I know you. So, we okay? Okay?
Now that's lonely. All right, let's bring in Bianco Research President Jim Bianco. Jim, we always talk about how much money all these people out there make. So I went to ChatGPT and I said, why do CEOs make so much money? And I got this list. It really didn't explain, though, what talent they have to make all this money, but they say they're responsibility and risk, market competition, stock-based compensation, those kind of things, the board. But, we don't talk about the skill and dexterity that you got to have to be a CEO, because they're in place to make $30 million a year to navigate what's ahead. And still, I'm really shocked that more CEOs haven't come up with more decisive plans. I know the lay of the land is rough, but we've got to use some logic here and then make some assumptions. And I would say tariffs will be a lot lower by December.
Yeah, I think that, the problem is that they're trying to give an honest assessment on what is going to be with tariffs, and they honestly don't know. So they don't want to be making things up. So that's kind of where they're at. But I think Wall Street in this unusual environment is okay with them kind of being wishy-washy about tariffs, because Wall Street really doesn't know either.
Right.
So as we try and go forward from here, hopefully, as you said, by December, this will have settled down to the extent that we can start making assessments and outlooks with some degree of confidence.
So it's ironic you read my mind, because the next question I ask ChatGPT is, why do Wall Street strategists make so much money? And this is the reply I got from them. They make very high salaries and bonuses due to the mix of expertise, influence, and high-stake nature of their work, right? So this is always high-stake stuff. You've got to be able to discern yourself, make these sort of decisions. The guy at Wells Fargo is the only one up there who's still saying, okay, I still see something happening positively. And let's assume we're lower in December in tariffs. The market's a forward-looking mechanism. So the market should pick up something positive long before December, and it might reflect in share prices.
Yeah, and I think it already has, because, think about how much that the market has rallied off the April 9th low when we had a 90-day reprieve in the tariffs. And we had, as you pointed out earlier, we just completed the 9-day rally that was the longest rally in the S&P in 21 years. So the market is hopeful, and it's showing some of that hope that there is going to be a resolution that is not going to be injurious to the economy. That's why it seems to be rallying so much. We were down 20% on a correction, and now we're down around 7 or 8%. Mm-hmm. So, we're still down on the year, but we're headed in that direction, and we're hoping that there is a path to seeing where we're going to go.
I thought there was some really big news on the trade front, but it happened with UK and India, right? But I thought the interesting part about it is if you look at the headline, this is after 3 years of talks, and they go on to say, if it wasn't for Trump pushing this, maybe they would have another 3 years of talk. Now, we've got Carney at the White House. I'm watching the market to take tick by tick. Initially, the conversation was friendly. The market started coming back, and then it started getting a little bit weird, and the market has, it's been going down ever since then. But do you have a sense that once we get one major deal, that the other dominoes fall quickly?
Yeah, that's really the hope. I mean, to go into market rumor, supposedly the deals are already done with India, Japan, and South Korea, awaiting their parliament's approval before they can become public. That's the market's thinking as to where we are. And that once these deals start to be announced, the hope is they're not just deals, unique to these countries, but they're a roadmap for everybody else. Oh, okay, so this is what we have to do to cut a deal and to get past all of this. Now, China will be a separate case, but this could be the roadmap for everybody but China. And that's, again, part of that hope that's gotten the market to rally back since April 9th.
So, Jim, I got 30 seconds. I'm going to go back to that, right? Because it wasn't just a rebound. So you had the sort of the massive downdraft. And for the most part, a lot of these indices reclaimed where they started from. The speed at which this happened, if you're an investor, do you say to yourself, you want to be really paying close attention so that when the coast is clear, you don't miss the big move?
Yeah, if you're an investor that has a long-term time horizon, you just have to ask yourself a simple question. Does any of this change where I think the economy or my company is going to be in 3 to 5 years? If the answer is no, you ride through it. If the answer is yes, I do think that this is changing the outlook, then you'll have to figure out how and by how much. And yeah, this is the speed at which the markets went down and went up is a signal to us about the great uncertainty. I know it's the most overused word on Wall Street right now is uncertainty, but it really does apply right now because we're just not sure what's going to happen from day to day or week to week. But eventually, this is going to get sorted out. And that's what the hope is. And once it gets sorted out, we get some clarity, we'll be able to move forward with confidence.
Sounds good. Jim, always a pleasure. Thank you so much.
Thank you.
All right, so my next guest says that this remarkable